The data coming out of China's 2025 Super Golden Week tells a complex story, one that's full of apparent contradictions. So today, we're going to dissect the high-frequency data from the holiday to really get a clear, objective perspective on the true state of China's consumer economy. There's a four-character phrase, Wang Ding Bu Wang Cai, that perfectly captures the holiday period, and it really gets to the heart of the paradox we're examining. Plenty of people, lots of footfall, but that didn't translate into high spending. This divergence is absolutely central to understanding the current consumer mindset in China. So before we dive into the details, here are the four key findings from our analysis. First, record-breaking travel numbers were met with surprisingly slow spending growth. Second, we're seeing a decisive structural shift away from goods and towards services and experiences. Third, per-person spending has softened. And finally, the market is clearly splitting into winners and losers. The main conclusion here is unmistakable. Mobility is no longer a reliable proxy for monetary growth. Here's how we'll break it down. First, we'll establish the core paradox. Then, we'll diagnose what's causing it by looking at sector-level data. And finally, we'll zoom out to assess the broader macroeconomic implications. Okay, let's start by examining the headline data. This is what really illustrates that core contradiction between how much people moved and how much they spent. You really can't overstate the scale of movement here. We're talking 2.432 billion cross-regional trips. That's a new all-time high, representing a 6.2% increase in daily trips over 2024. It signals a complete recovery in people's desire to travel. But this is where the divergence becomes critical. As you can see, spending growth just didn't keep up with mobility. Daily tourist trips grew by 1.8%, but daily tourism spending, that only grew by 1.0%. This gap is arguably the single most important signal from all the holiday data. So what that disconnect means is that the average spend per person per trip actually went down from about 916 RMB to 911 RMB. Now, you might look at that and think the absolute drop isn't huge, but symbolically, it's a really big deal. It marks a reversal of the post-pandemic recovery trend, and it's clear evidence of heightened price sensitivity among consumers. So that begs the question, if people were traveling so much but spending less on average, where did the money actually go? Well, the data shows a clear and accelerating divide between spending on goods versus services. And if you want compelling evidence of this shift, just look at the high-frequency VAT invoice data. Sales revenue from service consumption shot up 7.6%. That's nearly double the 3.9% growth rate we saw for goods consumption. This confirms that the primary engine of consumer growth has decisively shifted. The focus is no longer on simply acquiring physical products. It's about pursuing memorable experiences. And let's be clear, this isn't just some holiday blip. What we're witnessing is an acceleration of a fundamental, long-term economic transformation. All right, let's get more granular. When you drill down into the data, you see a market of very distinct winners and losers, even within those broad categories of goods and services. Consumers were clearly willing to allocate significant spending toward personal well-being, culture, and entertainment. We saw cultural and art services jump 18.6%, and spending at art performance centers grew by a staggering 50%. Fitness and sports categories also showed really robust growth, which points to a strong focus on health. And what's fascinating is that even within that slower-growing goods category, specific niches that aligned with consumer values performed exceptionally well. Green and organic foods, for instance, were up nearly 28%. Apparel linked to the guachao, or national pride trend, and smart home products both saw increases of over 14%. However, and this is a great reality check, this focus on specific values doesn't mean consumers aren't price sensitive. The cinema box office serves as a perfect cautionary tale here. Total revenue actually fell almost 13% from last year, and the average ticket price dropped over 9% to a 5-year low. So this tells us that even within the popular experience economy, intense price sensitivity is the dominant factor. And this all comes back to a single, incredibly important concept, Xingjiabi, which you can think of as the cost-performance ratio or simply value for money. This idea has become a dominant factor in how consumers make decisions. It explains both the rise of value-driven experiences and why sectors like the cinema struggled when they were perceived as being overpriced for what was on offer.
Okay, for our final section, let's zoom out and place these consumer trends into the broader macroeconomic context. We need to understand the key drivers and drags at play.
You've got these two sets of competing forces shaping the results. On one hand, you have targeted government support, like over 480 million RMB in consumer subsidies, which provided a floor for spending. But on the other hand, the persistent weakness in the property sector continues to be a major headwind, weighing heavily on consumer confidence and especially on spending for big-ticket items.
And this is the crucial point. While policy can provide temporary support, the most powerful and enduring force here is that fundamental shift in consumer values. This pivot toward experiences and xingjiabui is a structural change, not a cyclical one. It's going to outlast any short-term policy fixes and will continue to reshape this market for the foreseeable future.
So, the Golden Week data really paints a clear picture. We're seeing a consumer who is absolutely eager for new experiences, but one who is also more pragmatic and more value-conscious than ever before. This leaves us with a critical question for the entire market. As value and experience become the new cornerstones of consumption, which business models are actually built to last in this new and evolving landscape?